Since Russia's invasion of Ukraine, the greenback has gained almost 9% against a basket of major currencies. The dollar's rise comes amid an increasingly hawkish stance by the US Federal Reserve. Money markets are betting the Fed will raise rates as high as 3.6% by the end of 2023 to tame inflation at 40-year highs.
That it's not just been the Fed which has driven this US dollar move. Part of it has also been the safety haven element which the US dollar gets, because what we're seeing globally is concerning in terms of a potential slowdown. And the US dollar is an anti-cyclical currency. So when we start to look at slowdowns and potentially the phenomena of stagflation, which seems to be getting more airtime, then the US dollar does very, very well in that sense as well. So we're seeing slowing of growth in Europe. We're seeing slowing of growth in China due to the damaging lockdowns over there. All of that is supporting the US dollar as well.
The recent corrections to the US dollar came on the back of recent hawkish comments from the European Central Bank's President Christine Lagarde that the ECB is likely to start raising interest rates in the third quarter. But analysts have their doubts as the Russia-Ukraine war drags on and continues to create a commodities shortfall in Europe.
I think the big question is how long can the ECB keep up its hawkish front in the face of a slowing growth as a result of the commodity shock. And I think there is a very real possibility that the euro dollar could test a parity, especially if we see a disruption in Russian gas supply. And this could happen if the gas pipelines are damaged in Ukraine as a result of the war, or if Europe moves forward with its ban, with a ban on Russian gas, or if Russia cuts off gas, if there's a broadening of a cutoff by Russia gas supply to more countries in Europe as a retaliatory move.
In Asia, the US dollar rally occurred in tandem with a steep drop in the Chinese yuan. It came as China posted a series of disappointing economic data following a series of lockdowns in major cities.
The way that the Chinese authorities have tried to deal with this slowdown in growth due to the lockdowns is by allowing their currency to, well, dollar CNY to push higher, sitting up around 670. And my suspicion is there is further to go in that move. Could see it up as far as 685. Wouldn't rule out a blow off to 7, a big figure of 7, to be honest with you. But then as the lockdowns start to ease, we know that that is when we'll start to see the Chinese authorities unleash stimulus.
However, news that US President Joe Biden was weighing cutting tariffs on Chinese goods helped lift the yen to its highest level since May 5th. This in turn helped to boost an already strong Singapore dollar, which hit an all-time high against the Malaysian ringgit in the last week of May.
Singapore has been ahead in terms of tightening. Now, we have done 3 tightenings since October. So this has helped, dollar Sing to be relatively resilient to the dollar's up move. And what do I mean by that? Without those policy moves, I believe that dollar Sing would have been much higher, above 140, maybe closer to 143, 145 today. But looking ahead, given the view that I have that the big dollar may be topping out, then I'm still maintaining my forecast for dollar Sing to sort of hold in a sort of 134 to 139 range for the rest of this year.
So in these volatile times, where should investors park their money?
I'm paying more attention to the heavily oversold currencies, namely the euro and sterling, and of course, the commodity currencies as well, Australia, New Zealand, Canada. So these are countries that, they have tightened, but they have yet, their currencies have yet to benefit from the tightening because they have been eclipsed by the very hawkish Fed stance. I believe that once inflation in the US starts showing strong signs of having peaked and coming off for the rest of the year, then the Fed's tone will probably start to tone down. And this will provide opportunities to get back into these currencies at much more affordable levels.
Others believe that the US dollar rally is far from over.
It's still too early to look for a dollar peak, at least for this quarter. The US economy has been very resilient, and some of this resilience, the demand is fueling high inflation, and the Fed is responding. And this is why the dollar is benefiting from a hawkish Fed. For investors, I think maybe to explore still explore the dollar as a risk-off hedge, given that the environment for the next few months are still going to be quite volatile. Eventually, there'll be bright spots, but I think for now, dollar seems to be still the king.